Hello guys, welcome back to our update here on the stock market. We have a lot to cover. First, I want to start by saying thank you so much. I saw that the last video went completely viral and I see you really guys enjoyed my content. And I got a lot of questions regarding my chart. This is a monthly chart here of on the stock market on the S&P 500. And I spoke about that this median line is going to be the ultimate short signal, which is most likely going to start the World War III once we reach it. And that's when we're going to have a huge correction. Personally, I think it's hard to predict how big the correction is going to be, but I do think 50% is very easily achievable for the S&P. The market is way over leveraged. This is not normal behavior what we have gotten here. Basically start from the lowest 58% rally since October 2022. This is not normal market behavior. The whole stock market is way over leveraged. The economy is getting worse while the stock market just continues to go higher. We can see if we go on the normal scale, we can see how absurd this whole stock market looks. It's just going straight up at this point. And right now we're just waiting for a blow off top to hit the median line, and that's when we're going to have a huge correction. I wouldn't be surprised if we retest the COVID lows we had back in 2020 here, which are around 2,300, which would mean if our target is correct, would be another 69-70% correction of the entire stock market, which could be absolutely insane. But first, I want to talk more about this Pitchfork because I got a lot of questions regarding this Pitchfork. As I spoke that I pulled this Pitchfork from the lows here in 1974. So it's the world's biggest Pitchfork. And these are heavily used by algorithms. So how you want to use this once you want to look at the red lines. So the red lines are target. You can see here. Then we have the second touch here in 2000, and then in 2009 we have the third. So we have basically three pivots here that creates this Pitchfork. So the way the algorithms are using it, they keep buying. So the algorithms since 2009, the algorithms have been buying up the stock market. They have been pushing, trying to get the price to go to the median line. We can see right now we're in the final fifth wave, in my opinion. So we have a smaller Elliott wave count here, 1, 2, 3, 4, 5, which finished in 2021. And then we have the super cycle, which has started here as well, 1, 2, 3, 4, 5. So we're now ending the final fifth wave here, which is going to be the super cycle of the stock market, which is going to cause us probably a multi-year bear market. So the way it's the algorithms, they will start dumping all their shares once we reach this median line, which looks like it's going to be sooner rather than later. We're already approaching it really closely. We can see here back in 2021, price came very close to the median line, but then we had this correction here, which allowed for the stock market to continue even higher. Since the target is exponential, the longer it gets for us to get to the median line, the higher the stock market is going to get. My biggest guess is around somewhere around next year, 2021. 2025 in January, between January and May, somewhere there, I'm guessing we're gonna reach. Of course, we could have this blow off top, which can happen sooner, which already happened basically in February. So something like this is my guess, and that's where you want to exit all your positions and short the heck out of this market, because this market is absolutely managed. It's just a Ponzi scheme, the biggest Ponzi scheme in history. And we're probably going to get a wick or something through this median line. As soon as you get a daily close below, you just go all in and you just want to start shorting it. The stop loss you have to be a bit tricky about. You don't want to get stop out. Sometimes you can get a wick through, and then basically you want to aim for at least 50%, because this whole market is going to go to zero. It needs a correction. It's just too much leverage in this market, in my opinion. Everything is managed. It's just the Federal Reserve keep pumping up this market, trying to send it higher while the whole US economy is cratering. I have no confidence in this market anymore. I do believe no matter what news comes out, the worse the news they are, the higher the market goes. We can see here similar pattern on the Nasdaq. So the Nasdaq actually here on the weekly, I can show you live how this Pitchfork works. So on the weekly here on Nasdaq, this is a smaller time frame. So this is the S&P on the monthly time frame. So you can see here S&P on the weekly. You can see here how huge this Pitchfork is. It's going to be one of the biggest ones in history. But here on the Nasdaq, we can see actually only back in 2020 we had this Pitchfork. So I put this similar Pitchfork on Nasdaq here on the weekly. We can see here yesterday people are like, why is Nasdaq dumping? Is it because of the CPI news? No, guys, it's not because of the CPI news. It's because the algorithms are selling at the median line. So for those who are in the VIP Discord, link down below, we're looking at this to short the median line as soon as we hit. And that you can see here how the Nasdaq has pulled back here since the algorithms have started selling as soon as we hit the median line. Now the question is, overall the market is very bullish, but that doesn't stop us from having a small correction. So I do believe we can still see some further downside here. Overall, I still do believe the Nasdaq will go higher as well and follow the S&P. But you can still expect a decent pullback here because this Pitchfork is not small. It goes back until 2020. So it's been going on for quite a few years. So usually there's a substantial amount of selling pressure here from the algorithms because they've been having so much time to buy up this market, which they have to start dumping. So I do expect some kind of correction here on Nasdaq. I would say the least furthest down we could go. So like the most conservative target is here at around 19,600, the 0.31, another fib that nobody's talking about that is heavily used by algorithms. So something like this I could easily see on Nasdaq coming down here, and before then we'll continue higher and following the S&P. Something else I wanted to talk about on the S&P is here on the weekly. So we have this as a target, this major Pitchfork, but it looks like it's going to correlate if we take from the fourth wave here to the fifth wave, the smaller time frame fifth wave, and to the third wave again, and we'll go on the normal scale. So we'll go here on the normal scale, similar like we have on Nasdaq here that we just hit. So here on the S&P, we have similar target. So I do believe this Pitchfork could correlate with the bigger time frame Pitchforks. Let me go back here. It's hard to put them. So basically, with this target could correlate with this target, but we have to go back to the normal scale. So the S&P, you can see here, the moves is not finished. Anyone that's calling for a top here, they don't know what they're talking about. This market is gonna go higher. We need to get this blow off top. I see a lot of people are saying this is a top here. We're not gonna fall over. We're in a rising wedge and we're gonna break out of it. But that's not yet what's going to happen. We still have much higher to go on the S&P. We're going to break up off this hedge to the upside, probably reach either this median line here the same time. So let's say if we reach this median line the same time we reach the bigger one, which is going to be at around 6,500, which is going to be actually slightly higher here, which is around 7,000. So we have to kind of keep in mind both of these are going to be heavy resistance. We might hit this one first. Make a move down to the downside, take out of short. Other people will start shorting, thinking that's the top, and that's when we're still gonna have one final push here up to around 7,000 for the stock market. So that's kind of my outlook right now. I do believe it's a good time still to buy the stock market. We're gonna go higher. I still want to talk about a bit here on silver as well, because I got a lot of questions regarding these Pitchforks. So anybody that's interested on silver, this is a silver monthly chart. So in this case, I'm using the modify shift, not the original, but the modify shift here on silver. And we can see this Pitchfork also is one of the bigger ones that I've personally used, that goes back to 1972 to the bull run we had in 79, I think it was. Yes, in 79 here on silver, where we hit basically record highs, and then to the lows we had here back in the 90s. So you can see here this Pitchfork predicted the absolute multi-decade top here. You can see the algorithms have been buying up silver here. We can see here also how they have been respecting these lines, and that's where you can see the bear market started on silver once we reach this median line. You can see this pattern playing over and over again on all time frames. You can see here again the next stop we had here on silver. We'll just take from the lows here, I believe, to the highs and then to the recent lows. So you can see here we have the exact same pattern. We'll just use the same lows here to the highs to the lows. You can see silver topped again at the median line. So these patterns, there are no coincidence that they occur in the market, and they're super powerful at predicting tops. That's why I'm confident that this one here is gonna be one of the biggest crashes in history, because we haven't seen a Pitchfork this big on any market before. Not to talk about how over leveraged this market is, and we actually are not getting any real correction here in the S&P. Since 2009, we've basically gone straight up in a line. This market needs to correct at least 50%. Of course, we can overshoot as well, but I think we can easily get here to the highs back when for first COVID hit, or if not even to the COVID lows. Something like this I could easily see for the S&P in the next 5 years. So that's something to keep in mind. So if you're interested in more charts, guys, just click the link to join my Discord down below. Otherwise, I really appreciate all the likes I got on and the views on my previous video. And I see you again in a few days. I think Sunday will be the next day I upload to have our markets look ahead.
Yeah, trendsetter, whoa, league of my own, it don't get better. No, read what I wrote, I'm a bestseller. Yeah, reach